All right, thank God it's Friday. Market closes for the week, and what a week it has been. Of course, we will be giving you a breakdown of market activities for today, and also look at the larger performance this week. It's the end of the week as well, with a lot of big caps as well trending downwards. Could this point to a broader market sell-off? And what are some of the macroeconomics driving that? Of course, Oando is one of the exceptions, the second best performing stock, with a 314% year-to-date gain. So, we're seeing the bullish run on that as they complete acquisition of Nigeria's Agip oil. And are we going to see the share price settle for a bit, or the bulls are going to continue to drive this stock? That's something or questions we'll be asking today. And on the spotlight, the stocks worth over ₦1 trillion, we call them SWOOTs. They have amassed a combined debt of 4.6 trillion naira. That's a 15% increase in just 6 months. So we take a look at the impact that this could potentially have. Welcome to Market Pulse on News Central in partnership with Naira. We'll be bringing you that comprehensive breakdown of market activities. I am your host, Joanna Mustapha, and let's head to the NGX today. Intraday performance is what we're looking at. The market, at the end of the day, actually, it closed in the green, but looking at some of the performance of the stocks, large cap stocks at intraday did attempt to pull down the market, but somehow the bulls were able to have their way. If you look at the top gainers, one of the largest agro-based companies on the NGX, Okumu Oil, placed a profit. Obviously, it's a profit powerhouse in Nigeria's agro industry. They're leading the top gainers today, 9.99% at intraday as well. Total up 9.96%. UCAP as well, no surprises. Their investors, showing some sort of confidence in that particular stock, up 7.40%. Stanbic IBTC and Transcorp. We know that Transcorp also, they have very strong fundamentals that are that drove their interim dividend payments, and that's the first time that they're paying dividends since they were listed on the NGX in 2015. If we come to the top losers, it's interesting to see. We're seeing Transcorp Group PLC there as a top gainer. Transcorp Hotel apparently on the decline as well, a top loser. We saw yesterday it fell off the wagon pretty much. It's no longer a stock worth over $1 trillion. It has fallen from that high point and is down a bit. It was down yesterday. It's down again today. If we come to the top movers list, Access, they concluded their rights issue today, and we're seeing them there as well on the top movers list when it comes to trade volumes. Dar Communication is also on the top movers list. We know that they're experiencing some sort of management shake-up. Several directors and 8 senior management were shown the door, right, effective October 31st. So we'll see how that continues to impact the stock and decision-making of the new, directors and senior management staff. But, all in all, just 2 banking stocks there on the top movers list, and Veritas Capital leading the pack there. The Naira also is at 1,576 to the dollar. We'll continue to see how currencies react to the changes against the dollar, especially with the potential Fed cuts, rate cuts in the coming week. But joining me for more insights on market activities after this break is Idika. He is an analyst. Idika Ajah, he is an analyst with Naira. So stay tuned for that. Pulse of the day is coming up. This is Market Pulse. Right now, we're picking up the pulse of the day with Samuel Ekomi, research analyst with Naira. It's great to have you in, Samuel.
Thank you. Thanks for having me, Joanna.
Yes. Good evening, a friend of the house. Now, let's begin, right? Looking at what's happening on the NGX, we're seeing a sizable amount of decline, it's seen with the market, on the market this week, but it seems to be driven by a lot of the stocks worth over $1 trillion. We're seeing Dangote Cement. We saw what happened on Monday. Yesterday, we saw Transcorp Hotel as well dip below the $1 trillion in market capitalization, despite, their decent earnings and dividend payments. So do you think that this points perhaps to a broader market sell-off? And what would you say are some of the macros that are driving this move?
So of course, I agree that the market movement in recent time has been largely bearish, and it's not basically because of any form of stock at this point in time. The equities market is just not so appealing. So when you look at it from a strategic point of view, A couple of weeks ago, the MBS released inflation data, which indicated that inflation had dropped to 33.4%. That's the first time in a while now. And that what that suggests is that the CBN might either have to hold interest rate in their coming MPC next month or have to reduce the interest rates. And we also see that play around even in the US market, where Jerome Powell had a press release, press conversation this afternoon suggesting that there might be some form of about 100 basis point movement reduction in the interest rate. And what that means is that the yields for fixed income instrument would start to decline at some point in the coming weeks or months. And what it means for investors is that they want to be able to tap into some of this high yielding instrument at this point before it drops down. So you see a lot of capital movement move from the equities market into fixed income. And that's pretty much what you're seeing. A lot of buy pressure today in the European market. In the last 1 week since the inflation report was released by the MBS, we're also seeing a lot of buying the Nigerian bonds and treasury bill market. Just this week alone, we had the treasury bill auction, we had the bonds auction, and we saw some slight decline in the interest rates. And of course, what investors want to do is to begin to reallocate their portfolios, and oftentimes would be from equities down to fixed income market. It might be for the interim, but yeah, that's pretty much what is happening generally in the market.
You're saying perhaps that there's not enough liquidity to spread across both markets, both the equities and fixed income. So they're pulling out from equities and putting, their money in fixed income to take advantage of, some of the high yield rates right now, right?
Yeah, totally agree with you. Liquidity has been tight in recent months. Of course, since CBN have adopted quite a number of policies to tighten liquidity around the money market, the banking system. And of course, yeah, it's been like that. Of course, we had some FAC inflows at some point this week, but it's still not enough. The liquidity has largely been tight so far this year.
To the next question, I was going to say, what does this say about, what exactly drives the markets and investments and investors on the NGX, considering the fact that a lot of these stocks have actually placed strong earning results and fundamentals, but we're still seeing investors pull out. So do you think that we're seeing some level of investor fatigue here, or what do you think it is, and what drives investors and investments on the NGX?
So theoretically on paper, right, for anyone who wants to invest in equities, you want to look at it from either technical analysis or from fundamental side of things. You look at the financials, and technically, yes, many of these companies have done well, printing sizable amounts of profits, which suggests that dividend payment would also be good. Although for some other companies, the likes of MTN and less so, that they are not so good. Of course, manufacturing sectors suffering from FX valuation and volatility and whatnot. But generally, performance has been good. But looking at investors, the investors want to be able to look at where might I be able to maximize my return. Right now, the market is doing year to date around the region of 28%. Inflation is around 33.4%. And the 28% that you're seeing from the equities market is just a bench, an average. Some stocks doing 100, some are doing 4%, some are doing a decline. You want to be able to look at stocks, or you want to look at investment opportunity of vehicles that helps you maximize that. So oftentimes it's always around sentiment. You see Oando, for example, in the past few weeks has been largely bullish, and immediately they announced yesterday that they had acquired 100% of AG. We see a lot of buy, bidding. Of course, right now it appears that in the market there's really no offer, no one's trying to sell. But a number of people are trying to buy. That is driving the valuation of the company upward, and that's generally across many other stocks that you would find most times that are not even as liquid. The likes of Julie also experienced that last year and the early parts of this year. It happens, and it's mostly around sentiment. So news, conversations that happens. MTN two weeks ago or 3 weeks ago announced some form of negotiation with IHS, and that helped them to improve their stock price a little bit in about 2-3 days. We saw some level of moderation and some stabilization in the stock price. So of course, news around the business environment, the sector of industry tends to influence sentiments of investors.
seeing a lot come to play here. And I mean, you mentioned Oando. Oando has evidently been an outlier here. Its worth on the capital market has crossed over $500 billion on the local bourse. Earlier this month it did cross, and I think about right now it's 541 billion naira to market cap, right? So that's a great performance. But do you see this the share price continue to rally further in the medium term, or do you see perhaps the price settling soon? What are your expectations on this particular stock, and perhaps all stocks in general, right, in the months ahead?
For me personally, I think Oando might still have some upsides in the next few days, not long term, quite immediate, and that's because we have a lot of buy pressures, a lot of people who want to buy, and what happens is that the more you are bidding, even if there is no offer, you're driving the price upward. In the market, again, you want to look at some stocks that are quite cheap. You tend to see some possible movements around that area oftentimes. While for the big stocks, again, you want to look at the liquidity, because for companies whereby you have most of the institutional holders or directors holding a substantial amount of holdings in the company, they tend to not move as much. But again, you look at the floating level of the holdings in the companies that you want to buy, they tend to influence how much of movement you will see in the market. In my own opinion, the stock market generally in the immediate term is going to suffer some form of bearish movement, but at some point, maybe in over a month's time, we see those funds move back into the equities market, because as of then, the fixed income market, the expectation is that we start seeing a lot more deeper movement in terms of yield in the fixed income market.
I mean, we'll see what happens, and whether or not, as we did in the first half, we also emerged the best performing exchange in Africa for the second half of the year. We still have quite some time to go. You mentioned as well the deal that Oando has pretty much sealed, right? A deal that started in September 2023. They have now reached full completion. They've completed the acquisition of 100% of Agip Oil Company. So, I mean, what are your thoughts and what are your projections ahead for this particular stock? And what do you see, what's your assessment of the move, and how do you see that perhaps reshaping the industry going forward in terms of output?
It's great and welcome, although there are a lot of news and speculations around in the media around the idea around the acquisition, and if it has nothing to do with some political affiliation. But generally, I think it's good for them, because that also helps them solidify their feet in the upstream. We see a lot of oil firms, Nigeria, trying to want to, as much as possible, put their feet across the spectrum in the oil and gas sector, so both upstream, downstream, energy, renewables, and all that. And I think that helps them to do that. We've not been able to see their financials so far this year, but I think this is going to be positive for them in terms of profitability. And I think that's why we're seeing a lot of sentiment around their stock, why a lot of people want to take position in the stock. Even if I think a number of times in recent times, most investors, especially domestic investors, are those who want to take quick win, gain some arbitrage, and then move on to the others. Oftentimes, it's not always about fundamentals or if they want to hold position for long term. But generally, I think this acquisition is good for Oando, is good for the industry. It also helps to position the oil and gas sector preferably and positively, because we've seen some improvement again in the oil and gas sector as an economy. Generally, if you look at Q1 GDP, you saw that the oil and gas sector recorded some rare expansions compared to previous years and previous quarters. Okay. So I think that's really good for the oil and gas sector generally.
All right. Thank you very much, Samuel Oyekomi, research analyst with Naira. It's a pleasure getting your insights on the markets today. After the break, we know that Nigeria's economic landscape continues to shift. The debt profile of some of the nation's largest and most capitalized companies are climbing to high levels. More on this conversation after the break. All right, it's still Market Pulse, and on the spotlight, the stocks worth over $1 trillion are taking the spotlight. They're seeing a significant rising debt profile, combined debt profile. Of course, Airtel and a couple of others are left out of the mix because they haven't released their earning results. But yes, they have seen a combined debt of $4.6 trillion in the first 6 months of this year. So we have with us Frank Fagbo. He's a business analyst to provide us more insights. It's a pleasure to have you in, Frank.
Thank you, Joanna.
All right, so we're going to, because of time, go straight to the point. Okay. How do you see this rising debt profile perhaps impacting these businesses, these stocks that have huge capitalization? How do you see it affecting them and their performance on the NGX ahead?
So I always say that debt is like a tool.
Right.
And when I say debt is a tool, it's more or less like you can call it a gun.
Right.
A gun in the hands of a policeman signifies safety, but a gun in the hand of an armed robber definitely signifies danger, and that's what debt is. So they have access to debt. These guys are massive capitalized assets on the NGX. And so with that debt profile, what they do with that debt determines the outcome of their result. But the beautiful thing about this is we're seeing their debt ratio. We're seeing their debt ratio, their average debt ratio, and we're seeing that that's 6.8x. And it tells you that these companies have 6.8 capacity to be able to withstand that debt that they've accrued over the years. So to put it in perspective, imagine you get a loan of 100 million, and now you have 600 million capacity to be able to withstand that debt. That's what that means. And so it tells us that these guys are doing amazingly well.
So you're saying the debt is in the right hands?
Yes, it's in the right hand. My only fear is for MTN, because MTN, their debt ratio, if you look at it, is around 1.7 there, about 1.7x. And if you look at that, this is the first time in many years that MTN did not give dividend. And so they always say that
that FX component.
Yes, that FX component. Their FX loss was almost $1 trillion naira. And so with that in the equation on their statement, it's not really so good. They're standing with the debt, but I guess that they have very large market share and they'll do very well.
Thank you very much, Frank Fagbo. I mean, a lot said their debt in the right hands could be a tool or a weapon. So I mean, hopefully these companies are able to make the most of the money that they've borrowed, and that will perhaps drive profits ahead. But thank you once again, Frank, for joining us. Unfortunately, that's our show today, and of course for the week. It's been a pleasure having you join us. We'll do this again next week, 4 p.m. West African time. Every weekday, it's Market Pulse on News Central in partnership with Naira. Now let's see what's happening on the global markets. Straight point.